Morning, buddy. How you doing, Tim?
All right, Tim, if you could, just let me know if you can see the ES chart. All right, so I'm getting a bunch of people texting me like crazy right now going, oh my gosh, the market's dropping. So I just want to walk you through the futures markets here on the daily basis. Yeah, on the daily basis. So we've got the S&P futures up here. We've got a beautiful little demand level right in here coming through. So we got a rally, we got a base, little tiny basic county rally, as well as you got previous resistance becoming new support. So right in this area is where we've got the opportunity for a beautiful bounce today. There is a lot of selling pressure in the markets. There is a lot of selling pressure in the markets today, mainly led by big tech. Big tech is kind of falling off the face of the earth right now, which is needed. It's needed. So all the members for the Trader Boys here, in the previous classes, we've been going through, and for the last couple of weeks, I've been saying, hey, we need a retracement. We need a retracement in the market. So we've had a lot of chop through here, a lot of days where it tried to sell off, and kept getting buying back up. So finally, yesterday, we broke below those lows, closed below those lows, right? And now we're getting some follow through. So you can see we're coming down to this previous resistance. We're bouncing on that support level right now on the daily time frame. So we can get deep inside the zone. So we can have a pretty hefty sell-off today, which would be pretty awesome. It's going to create a lot of buying opportunities, some big buying opportunities in big tech. So if you're not comfortable in the down markets, just stay out of the market, stay calm, right? Keep your powder dry, and wait for the setup to come through. Wait for the setups to come through. So why couldn't I see the screen? It's saying on my end, I'm sharing the screen. Share screen. All right, are we good now? Nope. Here we go. Yes, there we go, got it. All right, so right here, S&P futures daily chart. Here's our daily demand level here. Beautiful rally, base rally. Nice little basing candle here. There's a lot of factors coming into play here. Previous resistance becoming a new support level right in this area. Demand just below that. So those that are educated would understand the support resistance area. It's very common for it to trade below previous resistance, becoming new support, trade below the support, down into the demand level before bouncing. We've got the lower trend line coming through here. This is a solid trend area. This is coming off the weekly time frame. So right here is solid support area, and the 13 and 20 period moving averages coming through as well. So great setup here. Awesome little setup. So a lot of fear in the markets today, a lot of fear in the markets this morning. You're seeing some big down moves on the NASDAQ. We've got a buying area just underneath, so be ready for it. Now, if this area doesn't hold, okay, we've got a long way to fall. And even this area down here that's currently highlighted in here, not a solid area of demand. You can see here, we've come in a couple times. We didn't stay in the area, which is good. It provides a little bit more strength, but we did come deep into that zone, which is not good at all. So this area needs to hold. And if not, then we've got a ways to fall here. Now, getting a deep retrace in the market is not a bad thing. It is a very good thing. If you're not comfortable on the downside of the markets, then sit on your hands. Stay out of these markets. Stay to the sidelines and wait for the buying opportunities, wait for permission to buy from the markets, and step back in. On the Russell 2000, And on the daily time frame, there is a little area of demand right in here. Okay, a little area of demand right in here. But you can see we're going to be breaking this lower trend line to get down to those areas. On the 30-minute time frame here, there is a great little area of demand that we are currently sitting inside of, and we're holding at this point in time. So this here is a great area. Now, just got to remember, the S&P and the NASDAQ do need to come lower. So the Russell may break through this area and get down into this drop-based rally area before. So we're going to kind of correlate the S&P, the NAS, and the Russell. The Russell has been maintaining strength the last few days. Finally today, it's giving that strength up. We are down quite a bit, 1.26%, in line with the NASDAQ this morning. So we're seeing a little bit broader market sell-off here in the pre-markets. Now we've got Powell coming out today. He's going to be speaking, so you can almost guarantee there's going to be some mention of, more stimulus. So we can't look at long-term down in the markets at this point in time with this much stimulus coming into play. You got 1.9 trillion coming through in the first package. We got an infrastructure bill coming through, and then now they're talking creating a third one behind the infrastructure package. So a huge amount of stimulus, which means huge amount of money to be injected into the markets. Moving on here, we got the NASDAQ. Right now, we have a level of demand here. Anyone that's trained in supply and demand understands this here is not the origin. The origin is lower. And as we go looking for that origin, okay, we get all the way down to this level here. So there's a long way before we get to a solid level of demand. There is a solid level of demand on the S&P as we saw earlier, which will correlate and relate with this market right here. You've got the moving average coming through, the 50-period moving average coming through underneath here. So would not be surprised one little bit to see it's come down into this zone right here. It is heavily beat up, heavily used here. It's not fresh by any means. And then close back above that 50-period moving average. So these are the areas we're looking for the buy to come into play. Right. Moving into the VIX. The VIX currently is above this support resistance level. Okay, so this is a support resistance level that was posted in the trading room, the trader boys here that we've been watching on the VIX. And every time we get up in here, selling comes in, selling comes in. So today we could see the same thing. If these demand levels hold in the S&P and the NASDAQ, the smaller on the Russell, we're going to see a spike above here and then close back below here if the market's currently remain bullish. So we've got to watch these areas. Be careful loading up on the short side. We're not near the top of the market, and that's kind of the messages I've been receiving this morning. You can see the top of the market is way up the top here. Right? Remember, this is a daily time frame, so we've been going down for several days. We're extended to the downward direction. So kind of think of the rubber band, it's pulled all the way back. Right? So just getting into even a weak area of demand here can really project that back up, even if it only gets to the supply area here before we roll over and then come lower. Right? But be careful loading up on the short side. We're already this extended to the downward direction. We're coming into wholesale prices as the institutions have proven to us before, just not a solid level of demand there on the NASDAQ. Okay. Oil's helping us in this argument, looking for the bounce in the markets. We're on the 60-minute time frame right here on the oil markets, the oil futures contracts. Beautiful little rally-based rally. Now, I'm not a big fan of rally-based rallies in the oil market, as it is kind of the old school methods of traditional technical analysis work much, much better. So support resistance areas work much better in this market than a rally-based rally. But you can see already we've got the little bounce here. So the oil market coming through and providing us with that support right there, that's extremely helpful. If you were to look at the sectors, right, if you look at the oil sectors, XLE is doing well this morning. So the energy sector is up this morning. It's up 0.88%, so almost 1% up in the XLE. So the oil market coming to this demand level here, that's going to create a huge amount of support for the S&P 500. There's a lot of oil companies trading the S&P 500. So with the oil market coming up, that will then provide that support. Now, also looking at the sectors, utilities is not is in the negative, so that's supporting the bounce. We're not seeing the follow through there. Other sectors that are up is XLP, consumer staples. That's more of a safe haven. And XLF is up 0.5%. So energy and financials up is supporting the S&P 500. That supports our argument on the bounce of the demand levels. And finally, we got the bond markets. Right, this is a 30-year Treasury bill. This is really what's been putting the pressure on the markets. Is a lot of people aren't aware that bond prices has been falling. Bond prices fall, interest rates rise. Interest rates rise. That causes inflation, and that's where the fear and concern that's coming into the market is this inflation that's is becoming apparent. And if we start to see higher interest rates, we're going to see less money going through the economy. We're going to see much higher prices coming into the economy, which is going to create a tremendous amount of inflation, which means the economy is going to stall and slow very quickly. That could put us into a much more serious downturn in the markets. If you go back, you studied the 30s, right? So, we had the Great Depression and so on. That was actually caused by overstimulating, too much stimulus, which caused high inflation, which drove us into depression. So this is a factor. Everyone's loving the stimulus, and you get the don't fight the Fed, but you can't just take a statement and trade from it. So you've got to keep an eye on the bond markets. The bond markets are currently in a beautiful little demand area here, and you can see just a huge rocket up this demand area. We are coming deep into this zone at this point in time, and we're not seeing any strength just yet of buyers in this demand zone. There is a little tiny level on top of level here, so coming even lower than this is going to be absolutely okay. So keep an eye on this. Keep an eye on the interest rates, and that will give you an indication of what's happening here in the markets, because this is the reason why we're starting to see the sell-off. You can correlate how many days we've been down in relation to breaking through this little demand area here that's proven. This is why the equity markets are currently pushing in the downward direction, because the bonds are pushing in the downward direction, causing higher interest rates. All right, guys, there's your quick review of the marketplace. No need for concern, need for education, need for understanding. That provides confidence in your transactions and trading. Come in, get educated, take those transactions, and may your charts be green. Have a great day in the markets.